Well, g'day there, traders and friends, market participants right around the world. You are here with James on behalf of Pivot Point Trading. Today's date is the close as at Wednesday, the 24th of August, 2016. What I'd like to do right now is just run through some of the price action which we are seeing across the three widely followed US markets as we continue to hold up and around these historic all-time highs. Here on the Dow Jones Industrial Average, we have closed at 18,481. As at the current juncture, it is still a relatively healthy market. If I zoom out and show you this on the weekly chart, here we are going back to really the beginning of 2015 where we put in that historical high. Since then, we have been, of course, moving back and forth between resistance up here just shy of 18,250. Recently, however, we have broken above it and we have held above. What we are seeing right now, of course, is the breakout, the retest of that old resistance, that macro resistance which has held since early 2015, and we are beginning to establish or at least ask ourselves the question, and we are set to find the answer, whether this is a legitimate breakout or if in fact it is going to turn into some form of a whipsaw, or what we call a false signal or a false breakout. Generally, what happens and what you want to look out for when we break above an all-time high, we will generally come back down and retest that pivot point. So we will retest that old resistance as new support. We have done that already on one occasion on the Dow Jones Industrial Average. Here we are at the beginning of August. We saw that retest of that 18,300 pivot. We saw again a brief rally, a temporary rally, which lasted for about one and a half weeks, which has sort of fizzled towards the beginning, or at least mid-August. Since then, we have largely been moving sideways. A lot of people right now are calling this some form of a reversal pattern. They are calling it a double top. It is still yet to play out. To get true confirmation in terms of a double top, you'd want to see price action break below this particular candlestick right here. Now, obviously, we haven't done that yet, but things aren't looking all that great. We have seen, again, a mixture or a combination of hangman candlesticks. You can see these three consecutive hangman candlesticks. We have dojis, we have shooting star candlesticks, and today we have a relatively bearish candle. Again, if we go back in time, you can see a mixture or a combination of these patterns continued. We have spinning tops and doji candlesticks over here. We've got multiple dojis over here. Again, spinning tops and hangman types of candles. Again, it's not really showing us a confirmed or a legitimate breakout at the moment. Again, it probably will continue to the upside. The best way to monitor this and to really take anything away from the current price action is just very, very simply follow these directions. On the Dow Jones Industrial Average, and again on the S&P and the NASDAQ, we are relatively bullish, and we have to look at this market in a healthy context. We will start to, become worried if, one, the 50 EMA is breached. And what I mean by breach is that we get consecutive closes below the 50 EMA, and of course we confirm this potential double top. That is scenario number one. This is the first point of concern in terms of a reversal and a false breakout up and around these all-time highs. If, of course, the criteria number one is that price breaks and holds below the 50 EMA for probably longer than 3 or 4 trading sessions, right? Generally, what will happen is that if we see a pullback, we may push on down, maybe intraday, maybe even for a couple of days. But if this is proven to be a legitimate breakout, we will reverse, we will continue the bullish trend very, very quickly. Also, what we want to see is to see price start to move below 17,979. Now, I'm not going to entertain any further comments or sort of if then or sort of hypothetical situations, because price simply hasn't confirmed and it hasn't done any of those things. So until price again breaches this 50 EMA and breaches below this hypothetical neckline, which again is setting up some form of a hypothetical double top at this particular point in time, you shouldn't be all that concerned. Yes, we are relatively overbought, and yes, we have been establishing divergence. Now, this is on the daily chart on the Dow Jones Industrial Average. You can see this divergence between the Stokes. You can see it also very well pronounced in the RSI. And again, it is here on the MACD. Now, this has not only been setting up on the daily charts, it's also been very, very exposed, very relevant on the weekly charts. However, post that Brexit vote where we got that outside day bullish reversal candlestick, and again, seeing these markets go parabolic, a lot of these divergent signals have been mitigated, or at least been somewhat defunct in terms of the signal confirming. But what is very interesting as well is that if we go out another fractal, and very rarely do you see this in terms of divergence, when we start looking at the monthly charts, yes, the markets again are pushing up to all-time highs, and yes, on the short-term and intermediate time frame, they are relatively bullish, i.e. that price is still trending above those exponential moving averages. Very, very, very rarely do we ever see divergence on the monthly charts. And if you put this again into context, let me just take the annotations off my chart so you can see for yourself. We've got the peak over here. Again, this is going back to 2015, which I singled out at the beginning of this video. And again, you can see price is pushed on up. It's broken out. We are at historical all-time highs on the Dow, also on the S&P 500, and we were above them on the NASDAQ. But you can see right now we've got that very strong divergence on the MACD, also on the stochastic. So hypothetically, if we do turn down, I'm not saying we're going to do this, but if we do, this is another major warning signal, which is more or less in the biggest fractal, which we can really look at and sort of take, I guess, analysis away from in terms of the monthly chart. Anything going further out in terms of divergence, if you want to look at quarterly or yearly data, it's simply just not there. And when the signal generates, if it ever does, it's just largely irrelevant or redundant because it's simply triggered just simply too late. The move has already been made at that stage. But very interesting sort of movements going on in terms of chart patterns. I think for about 25, 26 trading sessions now, the intraday price action hasn't moved above or below or had a major momentum move up or down more than 1%, which is very, very rare. So generally when you're up at these all-time highs and you're breaking above the very important macro resistance area, you can sort of break down at least that this move may be a little bit flaky because, again, price isn't continuing, or at least it's not aggressively moving in that directional movement, which everyone expects this market to continue to move in. So that's something just to think about. On the Dow Jones Industrial Average, we have the S&P 500, very similar to that of the Dow Jones Industrial Average. The double top isn't as well defined. You've got that sort of rough neckline right here. The past 3 days, we do have what we call an evening star reversal type of candlestick pattern. It isn't textbook, but you can see we've got this one white candlestick here. You've got this shooting star gravestone doji at the top and a relatively long day candle today as at the close on Wednesday, the 24th. So this is, sort of a hybrid reversal type of candle, but we are still holding above the exponential moving averages, and we will continue to do that, or at least continue to expect this market to trend until price again starts to break below that 50 and start to give us reversal types of signals other than these just simple one-day candlesticks and either two-day or multi-day candlestick patterns, which simply just haven't worked out. These divergent signals, again, are failing to confirm. We aren't seeing price move below certain critical areas of support. And until that changes, again, we still need to look at this market in a relatively healthy context. Moving into the NASDAQ is a market which We've had our eyes on very closely over the past couple of weeks, if not months. We've highlighted this area. This dark line here is the all-time high, 5,217, give or take a couple of points, and of course, some intraday movement. But we've been eyeing off this point. Now, the NASDAQ is closed back below this point as at the close on Wednesday. What we were talking about a number of weeks ago was the ADX being so elevated up here, about 63, I believe. Yes, it was 63. It was saying, well, look, we are still, again, relatively bullish, but we expect the NASDAQ to slow down and move sideways around this level. And that's exactly what has happened more or less throughout the month of August. It is still positive month to date. We are getting very close to the end of August, but this breather up here, this sideways sort of stagnation, which we've seen in price really for the past 3 weeks, we did see a little bit of a gap up to this critical area, which we're currently trading at towards the beginning of August. But what happens up here is very important for the NASDAQ. Yes, we've seen the ADX reset. The CCI, the Commodity Channel Index, breaking above those all-time highs is still relatively healthy. We're still pushing and holding up and above that 100 area. But what you want to pay attention to right now is to see what happens if, in fact, we come back down to some of these lower resistance areas, some of these lower support areas. You'd want to see a very strong bounce off from these areas. Volume, it hasn't really been supporting any of these bullish moves. We've seen very low or historically low volume up at around these all-time highs. Again, maybe that's a warning signal, maybe it's not, but price action is king at this particular moment. It always is, it always will be. And I mean, look, we're still relatively bullish, but we need to, of course, assess some of the risks, some of the cautionary types of signals, which we do see in markets from the technical side, and of course, limit our risk in terms of, risk mitigation, depending on what side of the market you're playing at this particular time. So that's some form of a short-term market update. Again, market is overbought, it's overextended. We still haven't seen a major pullback since that historical Brexit vote, where the market post-vote went parabolic to the upside. That's all very interesting. But right up here, right, very simply, we're going to continue the trend, or we are going to see what will ultimately be that false all-time high, that false whipsaw, that false breakout, which inevitably reverses if in fact the majority do not get behind, or the consensus do not support these prices up and around their respective levels across these three US markets. I'm not going to go into individual trades right now, but that is just a market update which I haven't really given publicly for about a month now, since this particular reversal right here, which came as a massive, massive shock. Each and every week in that pro class, we've been going through market analysis, we've been going through individual trade setups. And this is the first time since that I've been willing right now to sit down and publicly have a look at these markets and just sort of break down what we're looking for and what we expect these markets to do moving forward, or at least give ourselves a blueprint of an if-then scenario based on certain things happening with price action. So having said that, everyone have a fantastic Wednesday evening. I'll start posting these public announcements or these public analysis videos more periodically. I'll try and get through a couple a week moving forward. But what I've been saying to people privately is that this market itself, it really hasn't been really been speaking all that loudly. It's been really quite a dull market for quite some time now, moving sideways. And when we get that definitive break, either to the upside or the downside, then of course we will go back into the analysis and drilling into, well, where is this market moving next? Until that happens, we're sort of in a sideways chop fest, and you just need to remain patient at these levels and just let the market dictate to you which direction it wants to move. Are we going to continue this bullish break of resistance, and are we just finalizing that sort of sideways breathing consolidation up and around these all-time high levels before price continues? Or again, is this market going to sort of fool a lot of people, and are we going to see a terminal reversal from these all-time highs? Time will tell, and until that happens, just stay patient. But it is, again, James signing off on behalf of Pivot Point Trading. I'll be back with you most likely early next week, maybe later this week if we see something material happen during Thursday's or Friday's trading session. All the best, friends and traders right around the world. It's James signing off on behalf of Pivot Point Trading. Goodbye.